Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at the NDX, which is the ticker for the Nasdaq 100 of course, and we're going to be doing some Elliott wave analysis and some basic technical analysis before the end of the video. Now, before I begin, a quick note to all of you on YouTube here. I'm going away on holiday this Friday, which is Friday the 6th, and I won't be back for 10 days. So you're just going to have to put up without me because I have absolutely no intention of doing any work whatsoever, trading or recording videos. I'm going to be with my family, which I'm visiting, and putting my feet up and relaxing on the beach in the sunshine. That's the idea. So sorry, but not sorry. You're just going to have to deal without me. Now, to my patrons, I will of course make sure that I stick to my pledges and I make sure that you'll get your exclusive video for the following week as well. That will happen as I will pre-record it. And you'll also get this week's as well, and of course I will be taking my laptop with me, so I will still make some time to make myself available on the Discord to answer some questions, but obviously in a much more limited capacity, as I intend to only do what I need to do. Right then, getting back to the video, shall we? I thought I'd say that at the start of the video in case people don't hang around to hear it at the end and then wonder where the hell I've gone. So now that that's out of the way, let's get on with it. We're going to be looking at the Nasdaq, but before we look at this more detailed chart here, I just want to zoom out and look at a more long-term chart of the Nasdaq with an incredibly simplified count on it, because I just want to cover some market geometry ideas before we come in to look at the shorter-term count. We did this recently with the SPY, so I figured I'd do it with the Nasdaq as well. So in the shorter term here, very simplified count, the real question is, have we peaked in a wave 3, in which case intermediate 5 is here, primary 3 is here, and you know, sure enough we should sell off now into the primary 4 if that primary 3 is complete. I think it's possible it's going to drag itself out into the middle of August before we finally get there, but it could be there now. There are signs that the market is losing momentum and there's divergences building up, but we'll talk about that later. Let's just come over and have a look at this long-term count I want to show you, just focusing on the market geometry. So you know I love them, you know I always use them, they're a constant feature in my analysis. Pitchforks, and that's what we're going to use first to explain all of this price data in the greatest bull market on record, which is from the low of the GFC to the current day. And I don't just mean greatest in price, it is a long one in time as well. So here's the first pitchfork I want you to have a look at. Alright, so we're going to have to come in and have a closer look at this. As you can see, all of the price data bar the extreme of the taper tantrum and the extreme of the you-know-what sickness cause some breaks of the extreme outer bound here. So let's just zoom in, have a closer look and work our way up from the cycle wave 1 here. So as you can see, as usual with these pitchforks, we get constant tests of important levels. Yeah, I would be here all day if I showed them all, but you get bounces between levels, you get channeling between levels, you get tests and back tests and back tests. Here's the median line, here's the 61.8, here's the outer bound, here's the outer bound, here's the outer bound. You know, and we just continue to progress doing this kind of stuff all the time, channeling here between the medium and the 61.8, channeling here multiple times using the bottom of the pitchfork as support, here, 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 and so on and so forth. And we just continue to do this all the way up. When we take a swing high, swing low pivot off of a 1 and a 2, we know that there's an 80% chance, roughly an 80% chance of reaching the median line for our wave 3. So as we work our way up through here, through the median line, there's the bounce, 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 resistance along the 38.2, stretching it to the 61.8 until we finally find the 61.8, test it here again. You know, then we get a test here around the median line, test here at the 61.8, test here at the median line, break down through all this, and then we carry on. Come down to the extreme outer bound now, work our way back up, la-di-da, until finally we find our wave 3 top at the median line, as we expected. So there's our wave 3. Taper tantrum down to extreme levels. We make an extreme effort over 2019 to get back to the median line. The bull market at that moment in terms of the internal swing B, A, B, C here of our wave 3, 4 flat. The B was an absolute to the tick test of the median line where it immediately found resistance and collapsed straight to hell. Obviously, if you're a fundamentalist, excuse the expression, you'll be using the what sickness as your explanation of this move. It was obviously the catalyst for such a move. It just so happened to coincide with a perfect technical test of the median line of this entire bull market geometry from the initial swing high, swing low. Not uncommon to see these kind of things. We've then raced our way back to the very top of the median line, and we've made an effort to test the median line again, and to test it again here, and to test the outer bound of the pitchfork. This was basically the consolidation, right? This three-wave swing, we've got a 1-2, 1-2, we've counted it as. And this was, massive exuberant burst up to here. It's like, oh, we've overrun a little bit. Let's try and find support. Median line. All right, let's try and, there's some resistance here at the outer bound of the pitchfork. Oh, test the median line again. Oh, that's all right. Off we go. It's like a game of ping pong, or not ping pong, pinball, and it ding, 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 and then off we go. So as you can see, it's been in play the whole time, and now tested the 61.8 here, tested the 61.8 here, and now we're just off into space, floating around above the stratosphere at the extreme outer bound of the pitchfork, waiting for something to bring us back to Earth. Something. We need a catalyst, don't we? We had one back here, like I said, we got a perfect test of the median line, something needed to switch it on, we got something to switch it on, and off it went. I have no idea what it's going to be. There's underlying weakness in terms of momentum. Fundamental reasons, you could talk forever, couldn't you, really? Most people will tell you there are none at the moment, but the deflationists will tell you that the inflation that's in play at the moment will not last. The inflationists will tell you that the inflation will go even further. There's people also arguing for peak earnings, that we have seen the likes of earnings for the companies due to the lockdown, due to the dependency on tech, and the inflows into the stock market, that we have seen the peak of earnings, the likes of which we will never see again. Then there are other people saying these companies can just keep going to the moon. So, who knows? Either way, we're up here, we're waiting for something to switch reality back on. Whether on how much longer it takes to come, I don't know. My own suspicion is another test of the median line is likely for a primary wave 4, bringing us back to some sense of sanity and reality. It can't go below 12.435.36 as it would invalidate the primary wave 1, but a move down here sometime throughout the rest of the year, likely peaking this month in August or soon, moving down, correcting towards the end of the year, and then a final insane push into a 5. And I would say, since this could even act as a base channel for the completion of a 3, we would take the pivot from the 1-2 pitchfork here, which I do have a pitchfork for, could act as a base channel, retest it, and just go to the moon. It doesn't have to, it could stop just beyond the 3, but all bets are off. If this turns out to be a 3-4 completed eventually, we've seen what the market can do when it rallies, and a significant sell-off in a wave 4, which is what we're expecting, could trigger more stimulus. It could trigger more fiscal support, more stimulus, and that could be all we need to just do even more crazy. And so there you go, that's the long-term view using this pitchfork of the entire bull market. I find that quite compelling, quite interesting. Another thing I want to share with you is just how neat, whoops daisy, did not mean to do that, just how neatly, gotta be careful that I don't delete that number again, got some doodles here left that I didn't delete. Okay, so the next thing I want to show you is a parallel channel. Now I've used Elliott's first method here of joining the 1 and the 3 to find the 5. Okay, that's what we would normally be doing. Now what we actually see here is wave 1, wave 2, everything subsequently is contained beautifully inside of the channel, as you can see, to find our wave 3. We then get this expansive wave 4 going below the channel, temper tantrum and you know what sickness, taking us below the 4. The median line test on the pitchfork coincides with a absolutely perfect test of the channel. Like I said, if you're a fundamentalist, you're not going to care that there was an absolutely perfect technical test of the upper bound of the channel and the pitchfork. You're going to think it's because of what happened here. It was the news which did it, boss. but it was technical to a tick and triggered this sell-off. Now this has been used as a base channel, okay, because we broke out of it in the wave 5, came back in the wave 1 on a lesser degree to test it. We know that the top of this channel coincides with the median line of that pitchfork, and look what we get. We get a perfect retest here and here. It's not coincidence, guys. You know, it's not coincidence. And then bum 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 bum, off we go. Wave floating far off above the channel now. No real relationship to it at all. The wave 4 that I'm projecting along the median line here of the pitchfork, we know will coincide with the top of this channel. That's just common sense. Because you could easily come back, test this channel for support without breaking the count, 4 not below the 1, and then push up into the 5 next year. So that just seems like a logical place to look for support, okay? From a geometry perspective, we're not talking about fib retracements or stuff here, we're just talking about the geometry of the market and the sensible levels for the market to test and retest. So one thing I want to do now before moving on is I just want to switch out of log to show you how different things look. So what I want to do here, because we've gone 1 to 3, which are both inside of this channel, I'm just going to clone this channel. Here's a little trick to try and capture the more extreme moves that occur within the market. And you're going to create yourself a pitchfork, but without the pivot low. So what you're essentially doing is you're just placing 2 parallel channels on top of one another, and then the place where they meet becomes a median line, okay, between the 2. Right, so now we contain all the price data in linear scale. We can see we come up to the 3, we now contain that 4 and the extreme bound of the lower of the C of the 4. But since then, the market's done that. Now, I'm not going to argue, waste my time arguing with the bulls out there who think we're going to carry on going up like this until 2029. I've heard some arguments out there. You know what? Fuck it, whatever, you might be right. This has been described as a parabolic move, but it's not a parabolic move, okay? Because a parabola does this, right? Yes, it intensifies in verticality as it continues up, but it's a curve, okay? And that's not what we've witnessed, okay, since the completion of this low. If we look at this market, what we've witnessed is this. Right, that's what we've witnessed. That's not parabolic. That's Maverick on his way to help Iceman. You know, at the end of the movie, he's going vertical. That's what that is. So, if we're not talking rationally or reasonably anymore, and anything's possible, then yes, why not? Let's just go to 100,000 on the NDX. All right. To me, this seems unsustainable and confirmation of just a move up in stocks that like we've never witnessed before. A melt up that is so far out of human memory, like 1929, that no one's here to tell us what it was like on the ground at the time. I imagine with the meme stocks that we've got going on, the massive involvement in the stock market, the Robin Hood situation, fears of inflation and everything else, and maybe it felt a little bit like it does now, but no one's alive to tell you, so who knows. Either way, I suspect it probably was a lot like what's going on at the moment. Now, that doesn't mean it can't get more extreme. I'm expecting it to get more extreme. But I'm also expecting a top in the short term. So let's call it there for our long-term analysis. And let's try and come in and have a look at this shorter term analysis now. So using a parallel channel of Elliott's second methodology, which is to connect the 2 and the 4. The reason I've chosen this method here is when we connect the 1 and the 3 and drag it down to the 4, we leave our 2 completely unrelated, and we don't pick up any other points of contact, and it just doesn't look right to me. But with this channeling, we pick up the 2 here, obviously, we pick up this low here, and we pick up this low here, and therefore I suspect very likely another test of this channel. Okay, which would coincide with a median line test of that long-term pitchfork, which would coincide with the long-term channel test of the top of this channel on the log scale that we also displayed. So somewhere around here, potential low. Could go deeper. We've discussed, here's the wave 1 back here, right? So we know But we could come down somewhere to this level to test a wave 1 at primary 4 degree. But I just don't think the market's that weak, is it? I think there's just so much underlying bid at the moment that it can just keep finding support. So here's the rub. Let's just have a quick talk about where we are. So we've got our intermediate wave 1 here, 2 here, 3, 4 here, and we've got a very sharp short-term zigzag here, and we've got a very long and convoluted running flat here. So alternation in waveform, alternation in time, we like that, that's nice. Okay, and then we move up into this final potential fifth wave, and this is where I'm a little bit unconvinced and a bit unsure of myself, to be absolutely honest, and there's no point me telling you something I'm not necessarily certain of. The issue I've got here is, let's come down to a smaller time frame, see if I can display it more evenly. This initial move here I've counted as 1, 2. Now I've dismissed this and pull it back, dismissed this and pull it back multiple times, because with the gaps you see in the chart, it doesn't matter what time frame I come down to, I can't pick out 5 waves in this one. But I can get a structure into here on a smaller time frame for a diagonal into a 1. So part of me is like, move a 1 and the 2 to here and adjust for everything since. The other way I've been counting it is with the 1 and the 2 here and then going 1, 2, 1, 2, 1, 2, 1, 2, 3, 4, 3, 4, 3, 4, 5, 3. You know, so we've got a big extension in the 3 here, and big isn't really, big is an understatement. Okay, because I think this thing on minute time frame went beyond the 1618, so bigger than a typical wave 3 extension. But on the minor time frame, if I was using this pivot, it went to the 3618 and beyond, and still going higher. It's now at the 423.6. So there's wave 3 extensions and then there's wave 3 extensions. You know, this one's absolutely massive. So I suspect that I may have gotten this initial 1, 2, 1, 2 wrong, and I might need to readjust. So if I were to do that and move this 1 and 2 to here to make this a bit more reasonable, it's not exactly a small wave 3 extension then either. It still goes beyond the 1618, doesn't quite make it to the 2618. Okay, so it's not exactly small then, but it does have room to run. So perhaps that's right. In which case, 1, 2, 1, 2, changing the wave degree up to minute and then to minuet. So this would become minute, this would become minuet. And then we would move up to here. And then that would suggest that we've got the 3 into here, the 4 into here, the 5 into here, and therefore the 5 into here and the 3 into here. So that's the way I'm looking at it at the moment, depending on, and I wish I could be more certain, but depending on this count here, whether it's 1, 2, 1, 2 at the initial wave degree, minor, or whether it's 1, 2 minor to here with this as minute, then we've either topped and we're about to roll over with this bearish divergence in the RSI and the MACD, okay, or we've got 5 to come, 5 to come, 3 to come, 3 over here, and 4 over here, and I'm just not sure, to be absolutely honest. I need to see something compelling, some kind of breakdown in the price that actually gives up and says, right, we're correcting. At the moment, you've got the divergence in place, but you've got no follow through in price at the moment to suggest that anything significant is occurring. You've got this pattern here. So this looks like a zigzag into 3, 4. Come up into the 5 of the 3, and now we're connecting down into the 4. The problem is this doesn't look particularly compelling from a bearish perspective. I mean, it even looks a little bit like a triangle. So then you've got the question of, we have a count for the SPY which suggests that we're in an ending diagonal, right? So I'm not saying this is the case in the NDX, I'm just saying, like, with the same kind of pattern we got going on, you could argue that this is actually a 3-wave move with a B-wave triangle pushing higher, and that the whole thing needs to be recounted as a diag. but I can't see that myself. So I'm just waiting for something to break down to give me some clue, or to break higher to give me some clue. Maybe you could argue this 5 waves here seems a little funky. 3 waves here. I don't know. I mean, the only bearish argument there would be 1, 2, 1, 2, and we've got to get going now. 3, 4, 5 down. So that's it. I'm going to leave that there, guys. The Elliott wave count. I honestly cannot help you anymore at the moment. I suspect we're getting close. How close could be within a... It could be now. It could be a couple of weeks before we finish this minor degree. We have the divergences showing up in multiple time frames. Very strong here on the... Very weak here on the daily, I should say. Strong divergences, weak price action. In terms of... well, I guess... You can't call it weak, we just haven't gone flying up as usual, we've gone sideways for a little while. But we've got a series of lower highs in the RSI, a series of lower highs in the MACD. So let's just clear the count for a minute, we'll wrap things up with some basic technical analysis. Exponential moving averages, 10 in yellow, 20 in blue, 60 in orange and 250 in green. Alright, so let's stay here on the daily time frame for the moment. Little red candle from yesterday. Not particularly bearish, didn't gobble up any of the previous candles' price data. It may do if it breaks down today. What's the candle looking like on the weekly? Alright, it's an inside bar at the moment. Trading within the bounds of previous week's price action. So nothing dramatic as of yet, but it is only Tuesday. Above the 10, above the 20, above the 60, and so far above the 250. I don't know when we last touched it on the daily. I think it was right back at the start. Oh no, well, of course it was during the March 2020 low. It was the last touch of the 250. We're going to have to bring up a bit of noise for the minute here, because I just want to see how far we were relative to price above it at the time. We were... Oh, sorry, let's try that again. 19%. This was an insane peak. The run up here into 2009. That was amazing when it was happening. Obviously, it seems like nothing now, but this was pretty impressive. So we got 19% above the 250 here. What was it back here? %11 above it here. Another substantial peak. But they're all kind of irrelevant now into the world we've entered recently. If we measure it now, and I'm not even suggesting we're done yet, remember, we've got further to go before we retest the 250. I wouldn't expect the retest of the 250 until we complete primary degree. So another 17% move above. So relative to previous price moves, not as extreme as the January 2019, which was 19%, but in terms of price, it's spectacular in terms of how far above it we are. So it will come. More likely to get a retest of the 60 in the meantime, I think, completing not coming back beyond the wave 1, which is back here. I mean, it depends, doesn't it? You could argue a more significant top is in place, because if we take the peak here, let's just bring the... Sorry to go back on myself. Let's just remind ourselves of the peak, which is our primary 1, which for some reason has navigated itself to one side. Put a high in here. So yeah, actually, I'm not saying the 4 can't come back beyond the 1, right? We're not expecting it to even get close, but it could get close enough to test the 250 again, potentially, depending on how deep it comes down. I suspect it will probably respect the channel and then continue to press on higher, but anyway, let's just hide all this lot again. So we've mentioned the divergences. I don't think there's anything else to discuss. Until we see something more certain, we know momentum is weakening. We are at the top, or approaching the top of something significant. We are stretching all the extreme geometry of the market over the whole last 12 years. Something's got to give soon. But does that mean it's the top? I don't think so. I think we've still got another step to come down, a significant top in the 3, down into a 4, and then another big push up into next year. It's just that the count seems to fit that, but we'll have to wait and see, and let's see what the price tells us. If we get a phenomenal breakdown and sudden weakness in the market, we can reassess and consider the possibility of something more significant in play. But we have to see it before we go bearish, and before we start shorting this thing, we've got to see some sign that it's peaked. Okay, alright then, we'll leave it there, guys. Thank you for joining me on this technical analysis of the NDX. If you're new to the channel and you've liked what you've seen, please subscribe, smash the like, leave us a comment in the comment section below if you want to, hit the little bell notification icon to remain informed of future video releases. As always, massive thank you to my patrons, really appreciate your support. And if you're interested in becoming a patron, it is the start of the month, so you'll get a whole month's worth of value. If you do join now, head over to the link in the description box below, have a look at the tiers, see if there's anything you're interested in. Also, if you're not following me on Twitter yet, there's a link in the description box below. Alright guys, take care, and I'll be back with you later in the week. All the best, bye bye.